Hello everyone, welcome to my channel. Well, Nvidia bit the dust, but Berkshire Hathaway somehow managed to hang in there. And I benefited strongly trading the BRKB shares of Berkshire Hathaway, which is run by Warren Buffett. That is a very cautious stock. 45% of it is in cash, which is part of the reason why it's able to hang in there. Meanwhile, Nvidia is facing an antitrust suit from the Department of Justice, which only added to its troubles. Nvidia plunges almost 10%, dragging basket of chip stocks to worst day since March of 2020. Nvidia's steep drop knocked almost $300 billion in market cap off the chip maker and weighed on the broader market. Chip stocks have been rising in the past year on optimism that the artificial intelligence boom will create companies to bolster spending. The Department of Justice sent a subpoena to Nvidia as it deepens its probe into the AI heavyweights' antitrust practices, Bloomberg News reported on Tuesday. The antitrust watchdog had previously delivered questionnaires and has now sent legally binding requests to Nvidia, the report said, adding that other companies had also received subpoenas. Officials are concerned that the chip maker is making it harder to switch to other suppliers and penalizes buyers that do not exclusively use its artificial intelligence chip, the report said. Basically, they're saying that Nvidia is cutting out the competition too much. Nvidia wins on merit, as reflected in our benchmark results and value to customers who can choose whatever solution is best for them, a spokesman for the company said. Last month, the information reported the Department of Justice had launched an investigation into the company after complaints from competitors that it had abused its market dominance. Meanwhile, Berkshire Hathaway, their BRK-B shares, have been having a royal time of it, almost unbelievable. The market especially just took a dive on Friday, and Berkshire Hathaway went up. I bought it in the last 2 or 3 days. I bought it for around 469, and I got rid of it at 480 because it was still going up when the Dow had lost 400 points. But when it started headed towards 500, I said, man, this is too much. I got to get out. I didn't like the way the rest of the market was acting, and the technology stocks seem to be just sunk. I think it's because interest rates being cut really don't help them, because they have all kinds of cash and they actually benefit from getting interest on their pile of cash, whereas Berkshire Hathaway owns cyclical and companies that benefit from interest rate cuts. They own a lot of insurance companies, and insurance companies have been raising their rates, so they must be doing good. But I think some of their old favorites are just doing good, notably Coca-Cola. You can see the BRKB shares have made about 5% in the last 5 days, and its relative strength is 56, so it's not overbought at all. One of his better investments that he has owned for years, you might as well say forever, is Coca-Cola, symbol KO. Looking at the chart for Coca-Cola, KO, you can see that it's gone up over 5% in the last month, and it's especially been doing well the last couple of days. And its relative strength is 82, which means that it's probably overbought, but stocks can stay overbought for a long time. And I don't worry about a stock like this that's just proven its ability to hold up in a down market. It's actually encouraging that it is somewhat overbought. The chart compares the Dow to the S&P 500 and to the NASDAQ. And the Dow has gone down just a little bit, 0.6% in the last 5 days. The NASDAQ has gone down 3.3%. It's easily done the worst. And the S&P 500 did somewhere in the middle. It did a negative 1.6%. But I did the last 5 days because I think this is probably the beginning of a crash, depending on the data we get on Friday. If the unemployment rate goes up on Friday, I think this could well be the beginning of a crash. This chart shows dramatically how much better Berkshire Hathaway has been doing than the Dow Jones Industrial Average. And it's made almost 5%, while the Dow Industrials has lost 0.8% in the last 5 days. The difference is quite amazing. But I think even with Berkshire Hathaway, you have to be careful. It will all depend on what the data say on Friday. The things to watch out for is on Wednesday, we get the JOLTS report. That's the job openings and turnovers. And if that is below 8 million, that will be a bad sign. On Thursday, we get the jobless claims report. And if that is over 250,000, we're in real trouble because the unemployment rate will probably be elevated on Friday. We get all the big employment numbers, mainly the unemployment rate on Friday. And it had better be 4.3% or less. If it's 4.3%, it'll be mildly negative. If it's anything above 4.3%, it'll be massively negative, just because it shows a trend of increasing unemployment when the SAM, the SAHM rule, has already been triggered. And here you see a chart for the price of oil per barrel, and it goes back to June of 2024, and you can see that it hit as high as in the 80s, 83, 84, and now it's in the 70s. It's around 73 or 74, but this is not good. When the demand for oil and the price of oil goes down significantly, it's usually because economies are slowing down, particularly China is in a state of depression right now, actually. And good old SMCI, super microcomputer, what a tragedy. We're looking at the 6-month chart, and it was trading at over 1,100, and I was trading it back then and making good money, but now in 6 months it's come down to $441. The story on this is that Hindenburg, they put out reports on companies they believe are in trouble for one reason or another. People that short a lot like to read Hindenburg to see what the most recent disaster is. And Hindenburg said there was funny business with Super Microcomputers books, that something wasn't quite right. And Super Microcomputer several days later announced that they're going to be late with their financial reports because they're redoing the books, which sort of supported what Hindenburg was saying. So this is a stock that, its relative strength is 27. It's underbought, but the trouble is nobody wants to buy it. If you look at the statistics at SMCI, you can see that its price to earnings is only about 16. Its earnings growth rate is 44%. It's considered undervalued. It's considered to be valued at $980. And right now it's trading at $441. Statistics-wise, this should be buyable, but nobody wants to buy it because nobody knows whether to believe the books. once there's indication that there's funny business with the books, a lot of times people don't want to have anything to do with it. So I think they're going to be taking some time to straighten themselves out. So it all amounts to Friday's unemployment rate. If it's above 4.3%, that will be hugely negative and the beginning of a market crash, in my opinion. If it's 4.2% or even lower, that will be very bullish for the market. If things look good after Friday, or maybe even during Friday, because it comes out pre-market, if it comes out bullish, I will be trading Berkshire Hathaway, the BRKB shares, cautiously. And if it turns out negative, I'm tempted to go with SQQQ, the triple leverage bearish fund on the 100 largest companies in the NASDAQ, SQQQ. And I've traded it many times in the past. I'm hesitant to trade it simply because my impression with this downturn is maybe we just want to see it go down and then buy at the appropriate moment after having collected lots of cash. So I'm collecting lots of cash. I'm being cautious. The most I'm going to do is BRKB until things look like they're on a definite uptrend. Thanks for listening.